Guys, come from a daily FX. US dollar takes a dive after FOMC minutes depress high rate hike hopes. And this one's saying the dollar is plunging. Yeah, it's seasonal, and then we get the Thanksgiving, Christmas season, it goes back up. But so everybody's going, oh my God, the dollar's gonna fail, it's gonna fail, it's gonna fail. Well, here's another one where it's gonna fail. So it's coming from Jane Stanley, currency analyst. FOMC minutes. Let's see if they have something on what it is now. Okay, were released yesterday and highlighted central banks or a central bank that concerned with the global economy and in no hurry to hike rates. Risk assets have rocketed higher under prospect of loser for longer. US dollar has taken a strong dive after minutes released with a more dovish FED now being priced into the market. The theme could potentially last for a while. And here's basically the minutes. I'll put this up so you can see this here. So I'll put both of these up. You guys can look at this at your whimsy. But basically, stocks ratcheted high after it became clear that the Fed or Federal Reserve was concerned with global growth. There was a number of mentions of China in the minutes, along with numerous concerns around strength of the US dollar, all leading to the prospect of loser for longer, as it looks like the Fed's kicking the first interest rate hike deeper and deeper into the future. That just hurts us in the long run because your interest rates are kind of killing us no matter what. But kicking it up even longer is just going to kill us in the long run. They don't seem to understand that we need to stop the spending, but they won't do that, so it doesn't matter. To be sure, they did mention that they felt they were still on track for a 2015 height break, just as Ms. Yellen had claimed during a press conference. But within the minutes, and if you don't know what minutes are recorded meetings, it showed that the majority of the bank was in no hurry to hike rates, that the numerous concerns that have enveloped financial world over the past 2 months could in fact delay the Fed rate hike, so that's good. I'm going to let you go ahead and go into this, but what this basically says is this is the SPX 500, and it rockets higher after FOMC. But as you know, it's just gonna they're gonna rack it up and then it's gonna drop off. So next week could confirm or reject the bearish trend. Global stocks set for enormous weekly gain. If stocks rocket higher again next week, bear trends doesn't look good. If stocks sell off next week, we might have a lower high. So this is basically it, and then it basically tapers off. 2015 support of the dollar. As you can see, the projection is higher, but this is only, I can't even read that. This is 2014 into 2015, and as you can see, it slumps and it goes down. So these guys are doing what they can, folks, but in the end, they're doing the interest rates high and everything else so that we don't freaking collapse. And correct me if I'm wrong, isn't this very thing what China was doing? They were messing with their interest rates, which was affecting their value of their currency, and everybody was calling them out for it, yet we're doing it. I mean, isn't this what they did like the second day after, or I'm sorry, before the Tianjin bombing happened in that naval warehouse, to where it was like 6 city blocks. So they're trying to do everything, folks, but it's coming down. I mean, Nothing we're doing is working because we keep putting the money out there and we keep going up. Nobody understands it. They don't understand what you need to do is you need to contact the federal government. You need to say, look, take all your trillions, make it billions, and cut everybody who doesn't want to play ball. Problem solved. And just say, our dollar value is this. This is our price cut on this. This is this. And, this is this right here. This is how much we're going to spend on you. And that's it. That's it. Problem solved. Take all the military contracts, you take everything and say, this is how much you're going to get. This is what we're going to spend on you. And all you middle managers that want your 20, 30 billion a year, you can go somewhere else because we're not going to spend that kind of money anymore. We can't. We can't afford to. But you know what? It ain't going to happen because they all got the same memo that says it's coming down anyways. So this is from people on the inside. This is not a hype or anything else. This has come from the FOMC and minutes thereof, which sit basically as a consultant and various situations thereof over the Federal Reserve Bank and many other situations thereof. And this is coming straight from them. And look what it says. US dollar takes a dive after FOMC minutes depress rate hike hopes. And it basically says that central bank is concerned. I'm not going to go over all the things I just went over, but there's numerous mentions of China in the minutes, along with numerous concerns around the strength of the dollar, all leading to the prospect of loser for longer. Everybody's going to put it on the wall, folks. This is happening. There's nothing we can do at this point. It's just increase the interest rate and stretch it. That's all they're doing. They know at some time that bubble is going to pop. When it does, we're fucked. But this is what they're doing. This is their contingency plan. Go along with it until the end. Until it's someone else's problem. That's their liberal mindset. Until it's someone else's problem. It's not, let's go boycott Washington and kick out all the guys who want $37 billion a year to move the government contracts, where we can put in a call center that makes $7.50 an hour. That's things smart people do. Go figure, right? Right.